Hello everyone, welcome to the channel again. My name is André Cardoso. Thank you for being here as always. It's a pleasure to share my work and my analysis with you. I hope you enjoy it. So for today I want to cover a couple of Forex pairs, including of course and obviously the dollar index. Let's start with the DXY. Let's then cover some of the Forex pairs, and then we will finish with my perspectives of my view for Bitcoin. So let's start with the dollar index. We are inside what we may call a consolidation process. I believe it's not completed yet, even though I'm paying attention to some of these fractal levels of support and resistance levels. That being said, we are inside what we may call a triangle or a flag pattern. And we are actually at this point we are threatening the highs of that structure. So we have a daily fractal at 102.76, we have support at 102.31 and at 102.90. So I believe that a violation of these highs, in particular the weekly fractal at 103.10, may trigger a move to the upside. We have a nice inverted edge and shoulders pattern, as I mentioned before. The right shoulder starts to vanish with time. You know, when we compare the time to form the left shoulder, we like to see some symmetrical, at least in time. You know, we need we like to see the formation of the right shoulder converging with the time needed to form the left shoulder. So it starts to extend a little bit, but keep in mind we're still inside this consolidation process on the DXY. Some of you are already entering or approaching overbought conditions, so I pushed my bands a bit higher and lower, so I pushed it to the 80s and the 20 levels. Because I like to search for those harmonic patterns in divergence, but on extreme oversold, overbought level. So that's a personal, let's say, personal preference. So that being said, we are now facing resistance of this triangle or a flag pattern. So pay attention to potential moves, even to the downside from the trend line resistance, or the eventual breakout above it, and the confirmation to trade higher with the DXY, which will only emerge with a clear violation of the weekly fractal, so which will trigger the inverted edge and shoulders pattern. Of course, we are facing an inverted situation with the DXY. When we talk about the euro dollar, so we are facing a left an edge and shoulders pattern, not the inverted one, of course, and we have major support at 108.77. So I believe that a violation of these levels may trigger a move to the downside. We have default targets for that pattern at 106.58. So, and that's one of the reasons. And one of the reasons why I want to pay attention to this price zone is because it may start to emerge with a couple of patterns at this price zone. So let me try to adjust these levels first of all. So this is the major retracement level. This is a Fibonacci retracement. As we can see, we have the 38% Fibonacci retracement acting as a support element. Let's say a violation of these lows may trigger a couple of patterns that we can start to project below. One of them, the symmetrical projection, which points to this previous fractal support, this previous low. So we have support at 107.25, 24. So we have a symmetrical pattern projected at this price zone, basically retesting the previous lows. Usually when I see an approach to this internal fractal, in this case an internal fractal support between two major swings, I always like to consider that will be a lot of traders trying to push the price higher from these lows, and they will put their stops basically below this fractal support, somewhere between or below these lows. I will not be surprised to see a push, not only to achieve or to complete that sequence for the hedging shoulders, but also to hunt the stops positioned below. So we have another Fibonacci extension that we can use to track one potential harmonic pattern. Actually, we can track 3 harmonic patterns. We can track the 88.6% Fibonacci retracement. So this is the default, let's say the default bullish bat pattern. So this is not the place to search for that pattern. Usually I like to search for those patterns at highs or lows of a structure. So when I see a situation like this, I always prefer to wait for a push below this fractal support and wait for the formation of the bullish alt bat pattern, instead of searching for or looking for the bullish bat pattern, the default, let's say the default M shape. I want to see a push, an extension to the 113% Fibonacci extension level, and then I will consider that that move to the upside. Okay, so one step after another. Of course, we are first of all paying attention to the support level, which may trigger that move to the downside. So if that happens, that may open the door, let's say, to form patterns below, and I will start to pay attention to the 113 and eventually the 161% Fibonacci extension level. So that will depend how the market will behave once we approach this zone. We are far away from that to achieve those levels, so it's soon to talk about these possibilities. But even though one step may guide us to another, so the violation of the support should trigger the hedging shoulders. That move to the downside may help the formation of some patterns below. That may also happen, and before jumping to the dollar CHF, that may also happen for the Australian dollar and the Kiwi. The Australian dollar is now facing support, so we have a nice fractal support at 66.40. So I believe that a move, a violation of this structure support level may trigger a move to the downside. We have default projections for the symmetrical pattern, very similar with the euro dollar, projected right at this low. So we have projections at 65.18. So that being said, that also opens the possibility to form the alt bat pattern at the 113% Fibonacci extension level. So that's another possibility also for the Australian dollar, and that happens also. Let me tag this pattern, let's say 64.81. And the same may happen for the Kiwi. Very much the same. We have also a symmetrical projection that we can use to track that move to the downside, projected from the recent resistance that also points to the previous fractal support level, and that also opens the door to form those patterns very similar. The bullish alt bat pattern 60.47, or later the 59.07. So this is the golden Fibonacci extension level. So as you see, we have a few moves that we can use to track possible patterns. Of course, as I said before, step by step. First of all, let's wait for the breakout of this support that may trigger a nice move to the downside, but that we can take advantage of. So dollar CHF, let's move forward. One of the charts that I have to share with you on a daily time frame. I shared already, I believe, this chart before. So we are tracking a move to the upside towards a 38% Fibonacci retracement. It may take some time. 90.26. So this is a default target for that bullish shark pattern, completed at 84.04 to 24% Fibonacci extension. Actually, we had a nice reaction to the upside from the golden Fibonacci level. Not enough to achieve the default targets, and then we have a nice swing to the downside, completing the 224, completing the bullish shark pattern at the 224% Fibonacci extension level. So I will assume the market is preparing territory to move, to the upside. So it may take some time. We can see moves to the downside from this resistance. Attention to this daily fractal at 85, 65, 66. So we still need to break higher or break above this resistance in order to favor moves to the upside. But the completion of the pattern also suggests moves to the upside. Actually, as you can see, we are also facing the 113% Fibonacci extension level, which completes a lower degree bullish alt-bat pattern, as you can see, very similar to the ones that I was projecting before for the Aussie and for the euro dollar. So that being said, I will not be surprised to see the dollar CHF moving or trying to move to the upside, an attempt to recover from the recent losses, and at this point we should target the red Fibonacci levels, the 38% Fibonacci level, and then the 61.8% Fibonacci level. So I assume we are very close to the 38% Fibonacci, just a few more points. Let's not ignore the possibility to move towards the golden Fibonacci level. Just a few more points above, we have the default targets for that major bullish shark pattern at the 38% Fibonacci level, as I mentioned before. So pay attention to these potential moves on the dollar CHF. Then let's move forward to the dollar versus the Chinese yuan. And we are approaching what we may call a bearish shark pattern at the golden Fibonacci level, 7.21. So we are a few points below these Fibonacci levels. Let's also pay attention to this possibility. The formation of this pattern may open the door for a retracement for the pair also. Then we have the actually the cable, very much similar with the euro dollar, with a nice head and shoulders pattern. I believe we are facing the very limits to form the right shoulder at this point, the 78.6% Fibonacci level. If the market crosses these levels, it will start to invalidate the formation of the right shoulder. So I believe we are facing the very limit to form that right shoulder, and of course, as I said multiple times, we need to wait for that pattern to trigger with a violation of the support also for the pound. The bigger picture for the pound, and if for some reason the market rejects the idea of a deeper retracement here, we may see the continuation of a move to the upside, breaking the resistance level at 128.28. So any violation of these highs will start to favor moves to the upside, continuation of the trend, and eventually we will see later the formation of a cup. We will discuss that later if the market decides to approach this monthly fractal again. Moving forward, we already covered the Aussie and the Kiwi. Let's move forward for the dollar versus the Canadian. So one of the patterns that I'm tracking and waiting for, it's the three drives pattern formation. I need a new higher high. We have nice signs of nice divergence until now. Let's wait and see. But a new higher high may help the formation of this pattern, and the formation of that pattern will suggest a move towards the point A of the pattern, the first retracement or the first support after printing the first high. That's a default target for the three drives pattern formation. So I will assume that something like a 1.5%, 1.3% retrace after forming the pattern. It's not unusual, let's say. So that's one of the patterns that I'm waiting for the Canadian. The euro versus the pound also during today's session faced some resistance level. It helped to reinforce this resistance. Actually, we are in a consolidation process. This may call for more downside momentum. So we have a nice fractal resistance at 86.20. Only a recovery above these levels may trigger moves to the upside. One of the patterns that I'm waiting for, it's a bullish bat pattern projected at 85.68. So that requires, or that implies, a new lower low. So I will wait for that pattern in order to then try to take advantage of a move to the upside. And that completes basically what I want to share for this week. So I will then, if that pattern completes, I will target the 38% Fibonacci level, which represents something like 56 pips, 0.6%, a 0.66% move to the upside. Of course, if the price breaks below these lows, that will start to favor more downside momentum, and that will also invalidate the bullish bat pattern presented here. So that being said, that allows us to manage our risk properly, taking into consideration a specific pattern formation. So we rely on default target projections. We rely also on the invalidation levels for the pattern that allow us to manage our position sizing and our levels of risk. Now let's finish with Bitcoin, and I will keep my, actually we can reduce to a 2 hours time frame chart. In fact, let's keep the 4 hours just to show you. So last week I shared on Twitter the technical double top on Bitcoin, which calls for shorts below 44,300. So as soon as we saw the breakout of these levels, that triggers these major move to the downside for Bitcoin. And in fact, we had targets at 41,589. The 200% Fibonacci extension level, and we have just hit that Fibonacci level, so the default target for the technical double top. So we have also a pattern, I projected also a bullish sharp pattern at 41,367, so it's just a few points below the recent lows. I will not be surprised to see Bitcoin being pushed into a new lower low, and eventually a bounce after completing the pattern. But even though the price action may also suggest the formation of an head and shoulders pattern. So in order for that pattern to start to emerge, to start to unfold, we need to see an attempt of a recovery. In order to form the right shoulder, I believe we need to see at least an attempt to recover from these levels. And the bullish shark pattern may give some help for that to happen, just a new lower low to form the pattern and then an attempt to recover. That may help us to form the right shoulder. But that also calls our attention to this major support, or the current or the most recent support level at 41,500. So a clear violation of these lows may also trigger that head and shoulders pattern, of course, assuming we will see the formation of that right shoulder. So that being said, I will pay attention to these moves during the week. That's all for today. I hope you enjoy it, and I hope to see you there in the next video. Have a nice trading week, and see you there.